Hello friends, today we'll discuss on the topic how commercial bank creates credit. Friends, bank is a very essential financial institution that we need in our day-to-day life for making transaction, but many of us are not clear about the credit creation process of the commercial banks. Friends, a commercial bank can provide higher amount of loans to its customer than it receives deposits from the depositors. That is what is the credit creation process. We'll discuss the credit creation process of the commercial banks with a data set. Okay, before that, subscribe my channel to get more updated videos in the channel. So let us start. Credit creation process of commercial banks. Okay, credit creation is a primary function that basically determines the profitability of commercial banks. The commercial banks have the ability to expand their demand deposit as a multiple of the cash reserves with the banks. This is because of the fact that demand deposit of the banks serve as the principal medium of exchange, and in this way the banks manage the payment system of the country as a whole. In short, multiple expansion of deposits is called credit creation of commercial bank. Credit creation capacity of commercial banks depends on the level of credit multiplier. Credit multiplier, which is denoted by K, is equal to 1 by cash reserve ratio. If the cash reserve ratio of the commercial bank is 20%, then the level of credit multiplier, which is 1 by 20%, is equal to 5. Suppose the initial primary deposit of a commercial bank is rupees 1000 and the cash reserve ratio maintained by the bank is 20%, then the credit creation process can be exemplified with, that is the table shown in the slide. Suppose that is the commercial bank maintains the cash reserve ratio of 20%. If a person A deposits rupees 1000 with the bank does not keep the entire cash in reserve, but only the 20% of it to meet the day-to-day cash demand. Thus, after keeping rupees 200, that is 20% of rupees 1000, the bank lends the remaining rupees 800 to person B by opening a credit account in his name. Again, keeping 20% of rupees 800, that is rupees 160, the bank advances remaining 640 to person C. Similarly, keeping 20% of rupees 640, that is rupees 128, the bank advances the remaining 512 rupees to person D, and the process goes on. This process will continue till the initial primary deposit of rupees 1000 and the initial excess reserves of rupees 800 lead to additional derivative deposit of rupees 4000. By adding up all the deposits, primary plus derivative, we get total deposit of rupees 5000. Here the credit multiplier, which is the reciprocal of the cash reserve ratio, is 5, and the credit creation, that is the total derivative deposit, is rupees 4,000, which is the 5 times the initial excess reserves, that is equal to the times of credit multiplier. Okay, the credit creation, that is equal to initial excess reserve into credit multiplier. Here initial excess reserve is rupees 800 and the calculated credit multiplier is 5, and thus total credit creation is 4,000, which is 5 times the initial excess reserves. Thank you. This is how commercial bank used to create credit, and credit creation of the commercial bank results more amount of credit flow in the economy. Thank you.